Good morning, everybody, and thank you for joining us here for this webinar, which promises to be very exciting as we deal with the importance of internal controls in combating fraud. I am Rick Dahlside, and I will introduce myself in just a moment, but first wanted to welcome you all, and then just a couple of quick, what we call housekeeping tips. We will be recording this presentation, so it is going to be available as well as the slide deck that you'll be seeing here shortly. So once the presentation has concluded, we'll make those available to those that are joining us. Also wanted to just encourage you throughout the presentation to enter questions in the chat area. That way we will address them as they come in rather than waiting toward the end. We'll have a little bit of Q&A at the end to cover any remaining items, but for the most part, we'd like to try to address questions each time they come in. So please send those through the chat, and I'll be monitoring that throughout the presentation. So this presentation is put on we're co-presenting with PBO Advisory Group and Banner Bank. And just as a means of just a quick introduction about PBO, PBO Advisory Group gives you access to highly skilled finance, accounting, human resources, and business consulting talent. We're headquartered here in San Diego. We have more than 60 professionals, and we serve clients throughout Southern California. Today, in the presentation will be myself and Matt Fishman. Matt is the Vice President and Senior Treasury Management Sales Consultant with Banner Bank. He has worked in the treasury management industry for 16 years and the last 4 with Banner Bank. Matt was recognized with Banner's Best Award in 2022. He's a native of San Diego and currently resides in North County with his daughter and his wife. And myself, I'm Rick Dahlside. I'm your humble moderator for today's presentation. I'm a consulting CFO with PBO Advisory Group, working with companies to improve their advantage in perfecting corporate vision and ensuring organizational efficiencies. I've worked with the nonprofit community for the past 17 years, and I'm also an instructor with the nonprofit School of Leadership and Education Sciences at University of San Diego. I am not a native of San Diego. I'm a transplant, but I live here with my wife, Denise. All right, so that's enough of the kind of the introductions and the advertisements. Today we're going to talk about combating fraud in your organization. And there's various types of fraud, from financial statement fraud, corruption, misappropriation of assets, embezzlement. And we're going to touch on most of these, but we're first going to start with kind of a broad examination, and then we're going to zoom in and focus on some specifics with regard to banking activity, which Matt will address shortly. And our hope is that you come away from this presentation with a renewed sense of awareness and urgency around your own internal controls. And so I'm going to start by covering the 6 elements of good internal controls. And of course, throughout in my presentation, I'm going to reveal the #1 factor in preventing business fraud. So stay tuned for that. That's coming. We'll stay on this slide. And again, starting kind of in a broad sense, like, what are internal controls? So one definition that I ran across from Jonathan Marks is, okay, hang on, a process of interlocking activities that use properly designed policies and procedures, which are preventative, detective, corrective, directive, and collaborative, along with training and continuous monitoring. How is that? English, please, Rick. Okay, at the basic level, it's policies and procedures to safeguard your assets. Okay, so we don't need a big, long, flowery definition. Basically, it's common sense and doing the right thing to protect your assets. And so with those basic things, we're going to start with what we call, one of the 6 elements is control cues. And this really gets to the attitudes of those in the organization from the top down around different things that involve the assets of the organization. And the assets of the organization are quite simply what you own. And in really basic terms, it's cash, accounts receivable, it's property. Those are the things that you own. And a lot of organizations have billings and accounts receivable. Or if they're a nonprofit, you might have contributions coming in through the mail. So it's very important who opens the mail. Is that just anybody that just opens the mail and it's passed around? Because what's in that mail oftentimes are checks or assets. People, I think, still are paying bills with checks. Another important cue, when you think about these cues and these attitudes, is like the safe, right? A lot of organizations have safes. Somebody gets in the morning and unlocks the safe. Is it left open? What's in the safe? Usually things of value. But those are things that reflect the attitude of the organization. Oh, the dial is so sticky, it takes so much time, we just leave it open. And those attitudes are cues or kind of revealing of what the attitudes of the organization are around safeguarding the assets. Another important control cue is questions. Who's asking questions? Why is this happening? Why is that happening? Your board of directors should be asking questions, as well as leadership should be asking questions, not only about why things are happening, but why things have been set up the way they are. So asking questions is a good way to get to the bottom of what might be going on. And there's some other things that we can talk about to be a little bit more sophisticated, like we can encrypt email. We're going to hear from Matt about some email things that are going on, very concerning. And so there's ways to combat that using encryption. How you distribute financial information. Do you put those just in email fashion? Emails can be hacked. Systems can be hacked. How are you safeguarding your financial information? And then we talk about intellectual property. Well, Rick, I'm not inventing anything. I don't have any, special gadgetry that I've created. Well, it's not just those types of things when we talk about intellectual property, but your own processes might be intellectual property. They might be set up in a way that helps to protect your organization specifically. And if somebody else gets wind of that, then they might have a way to crack your organization. So, and then just the kind of overall awareness of controls. How do we get this information out? How do we make sure all the employees know what we're doing? Well, one of the ways, next slide, please, is with policies and communication. It's important that we have these as a part of our components of internal control. Is there a written policy and procedure manual? I can't tell you how many organizations I go into to look at those. They don't have one. And if they do have one, how often is it updated? It should be updated continuously, once every year, every other year. If they don't have one, if the organization doesn't have one, where do you get one? You can visit my friend Mr. Google and just Google policy and procedure manuals, and you'll get a plethora of resources available. So there's lots of organizations, and if you belong to an association, you can go to that association. A lot of times they'll have them as well. And so what are some of the key ones that we need to have and we need to look at and pay attention to? Well, obviously the accounting procedures and policy manual, like what do we do with money that comes in? How do we release money to go out? We need a vacation or PTO, personal time off policy, and we need to track that and pay attention to it, because what happens when you have an employee that for some reason just is never taking vacation and they're involved with something that has of a financial nature? There might be some red flags that would go up with that. Also, fraud prevention and detection policies need to be in place. And I think Matt's going to talk about some of that too. What about your IT policy? What do you have with regard to bring your own device? Can anybody just bring their cell phone to work, or their tablet and log into the system? Those are all extensions of your own business's vulnerabilities by having that. And so finally, I just want to say it's important just to document as much as you can and revise and document and revise so that, and then make sure everybody's aware of that. You're getting that information out to the employees. And so we're going to move on now to the next one. And so often what we hear, well, especially in audits, the auditors will comment on a lack of segregation of duties. And why is this important for an organization to follow? So basically we have three different main areas of responsibility: custody of assets, authorized use of assets, and record keeping of those assets. And so those, if you've got one person, you can imagine, in charge of all three of those, they can pretty much write their own ticket. So that's why we want to have segregation of duties, so that we can separate those important functions into logical areas of responsibility. And you say, well, Rick, I'm a small nonprofit. I can't have three different people. I can barely have one. Okay, I get that. So we have to think outside the box. Maybe we need to go to our board of directors and have them step in and provide some of this oversight. You know, smaller organizations, especially on the nonprofit side, volunteers can often fill those gaps. So that's just something we want to make sure we're keeping track of. With respect to the record keeping, you know, how we process cash going out, how we process cash coming in. Again, I don't want to overemphasize, but I want to point your attention to the importance of having somebody, more than one person, opening the mail at a time, and then just this oversight. Now we're going to move on to the next slide, please. Another component of good internal controls is budgeting. So record keeping, but under that, we're going to talk about budgeting in a second, but I think we went ahead one too many slides. So if we go back to slide 5, okay, this is, okay, all right, sorry. Okay, go to slide 6 then. Record keeping, yes, all right. And so with respect to record keeping, the more you can automate, if possible, the less individuals and people that are touching documents and assets, the better. And so ways to heighten internal controls are in the area of payroll, using a payroll service. You know, like I mentioned here, ADP, Paychex, Paycom. I'm not endorsing any particular one of those, but just the fact that all of those work very well for an organization to track things like pay, vacation accruals, and provide reports on that. Accounts receivable management, when the money coming in, who's monitoring that? How are invoices being aged out in the system so that we can track when a customer is taking too long to pay? Cash management systems are important. You can, many of your banks offer different types of those systems and platforms to help you manage cash. And then accounts payable, I can't overemphasize this enough. Bill.com is an excellent platform to help you pay your bills, where it provides a workflow and sends invoices around to the right people for approval and then finally for payment. And it's all secure, and it's a well-respected platform for doing that. And then inventory, that's another important asset that many organizations have. And it might be just, you know, dusty old widgets, but it might be diamonds. And so there's always opportunity to be a little bit more careful and cautious with our inventory. And then I just mentioned software as a service, because there's so many organizations now going to use you know, QuickBooks and, you know, NetSuite, all different types of platforms to keep track of their accounting. And so now I'd like to go ahead and go to the next slide, and this is where I got tripped up a little bit. But on the budgeting, it's very important that an organization has a budget and they get that done before the new year begins, so they can track where their income is going to be going, and then each month report on that, how they're doing in their actuals against the budget. It should be at least a minimum of a year, and if possible by month, and then reporting out those month-to-date budget to actual and year-to-date budget to actual variances. I also mentioned in here the cash flow projections, and to have that as part of your internal controls, and it going out at least 18 months. There's organizations that have done studies on frauds with, you know, where employees have embezzled, and the typical average length has been about 18 months that the fraud had been going on before it was detected. And so, wow, how much damage could a potential employee, or could an employee do with that kind of leeway? And then finally, we want to make sure that our cash flow projections are being updated at least quarterly, keeping everybody informed of, you know, what's expected cash coming in, cash going out. This is over and above the budget requirements. Okay, so let's move on to slide number 8. And we're just going to continue on with the theme of financial reporting. and that timely and accurate financial reporting is paramount to good internal controls. And when I say it's not application specific, what I mean there is all the top rated different accounting platforms, like I mentioned, QuickBooks to NetSuite to all the different Sage and all the different ones that you have out there, all have financial reporting. So it's imperative that the organization has instituted good financial reporting guidelines, that they're preparing financial reports at least monthly for some form of leadership to review, ownership, boards, things like that. And it should be with a checklist so that it's every month at the same time, like financials are going to come out the third Friday of every month or the 15th business day or what have you. You should have your books closed and financial reports out between 7 and 10 business days. And those should include monthly reporting and then year-to-date reporting. Should also have a balance sheet that compares the current balance sheet to the previous month. Remember, the balance sheet is that document that has assets, liabilities, and net worth or equity. And then the income statement is a kind of a picture of time from beginning of year to the time that it's being reported on, typically the month end. And it should compare to budget and by program or department if possible. And then finally, I want to mention utilization reports, which are important for organizations that have some kind of a resource that they're using up. Maybe it's membership or it's so many widgets that they're selling. How much is that being utilized? And so there should be some kind of reporting that addresses that. And so let's move on to slide number 8. Just a couple more to go, and then we're gonna kick off with Matt. So now this may seem intuitive for some, or maybe counterintuitive for others, but research tells us that knowing your employees is the #1 factor in preventing business fraud. Now, I'm saying that, and it's a bit kind of tongue-in-cheek because it's obvious, Captain Rick. It's obvious knowing your employees is important. But what does that mean? It means by knowing them, like observing them. Do they show up to work on time? How are they? What's their attitude around the office? Are they driving a brand new car? Do they have lots of new clothing? Are they going on vacations? And then just listening to your employees to understand more about them. Are they struggling with things at home? I mean, we're experiencing a lot of economic strife right now, and so it's understandable that people would be, struggling right now financially. But what are they saying about that? Are they mad or giving signals that something might be amiss? So just knowing your employees, truly, if you think about any kind of fraud that you've been exposed to, that you've been aware of, and you think about how could we have prevented this? And it undoubtedly kind of comes down to, well, if I had just acted on that little bit of knowledge, if I trusted my gut when they said this or that, or they came in a brand new car that I knew they couldn't afford, there would have been something that would have triggered that. So pay attention, because it's easy. It doesn't cost you anything. It's just paying attention. And so let's go on to slide 10. And then, so internal control programs need to be monitored and revised on a consistent basis to ensure that they're effective and current with technological and other advances. So if you don't have an internal control process or fraud prevention program in place, hire a professional with experience in this area. And this is one area where PBO can gladly help. We do what's called an internal control review. We've done this for many clients who have experienced some kind of fraud event or have not, and just want to kind of be prepared. But what we would do is go in and spend a little time. And this is something that your auditors aren't doing if you're having an audit. This is a deeper dive. We're doing an internal control risk assessment. We're going to look at the opportunities that may exist for fraud, both in embezzlement types, corruption, and also financial statement fraud. and then identifying key control objectives, like what is it you are trying to protect. And then we would look at how those controls are designed and test them, and then we come back with a report. So with recommendations for improvement. So that's something that we do quite well, and happy to be a resource for you and your organization on that. So now that you're all full of this information about what is internal controls and how do they work and what do we need, we're gonna zoom in and we're gonna talk about payment fraud and preventative measures. And I'm gonna turn it over to my friend Matt Fishman. Matt, take it away.
Good morning, everyone. Thanks so much, Rick. Great information there. You're going to hear a lot of the themes that Rick just covered echoed throughout my presentation. But as Rick kind of alluded to, I'm going to come in from the bank side. Obviously, I work with Banner Bank, so that's where my expertise is. If you have questions while we're talking about this, feel free to chat them in again. Happy to stop and do that. I'm going to move really fast through this. This presentation, again, will be provided to you guys afterwards, so don't worry about taking everything down. If you can't see everything on the screen, you're going to get copies, all of our contact info, so you can reach out to us. So go ahead, next screen. So today, like I said, we're going to talk about from the bank's perspective the types of frauds and trends that we're seeing out there, and really the ways to prevent those. Next slide. And one more. So back in the day, payments used to be very concentrated to obviously check writing, a wire here and there, maybe a little bit of credit cards and cash. The new landscape of payments obviously includes so many different things: your Zells, your Venmos of the world, your fintech companies, your cryptocurrencies potentially, your ACH originations these days, your RTPs, your real-time payments. So the landscape of payments has really changed over the years, and it's just opened the door to a whole lot of different types of fraud. Next slide. All the information I'm going to be sharing to you today, as far as statistics goes, was taken out of the 2021 AFP Payments Fraud Survey. The AFP, or the Association of Financial Professionals, is my governing body. They do this on a yearly basis. So 2021 is actually a year old, but the 2022's numbers, which I haven't had a chance to update, really reflect the same trends, the same numbers. The information I'm going to present to you today is still very, very valid. So in that survey, 74% of responding companies reported being targets or having actual fraud committed against their companies. That pretty much tells us it's not a matter of if, but when your companies are going to be targeted. 76% of the companies were targeted with business email compromise, which we're going to go into with a lot more detail here coming up. Next slide, please. So, of all those payment types, it's still checks that very much dominate those attempted and actual fraud. We'll go into the details why in a second here, but after checks, you'll see it's your newer, your more electronic forms of payment. Often those are the targets of the business email compromise, being the wires, being the ACH debits, the ACH credits, and then of course your commercial and corporate credit cards. Next slide. So check fraud obviously was overwhelmingly the #1 source of fraud still to this day. So why is that? Honestly, it's the easiest type of fraud to attempt to commit and to actually commit. All you need to commit check fraud is the MICR line information, account number, routing number. From there, you can either reproduce checks yourselves. If you've stolen a check out of a mail, for example, you can then wash the check very easily, and you can present it to a myriad of locations: your bank, any check cashing store, a Walmart's a check cashing store. Most gas stations now also take check cashing. So it's a much more easier form of fraud to commit. So what are ways to stop check fraud? Well, overwhelmingly, you can see the #1 way to stop check fraud is positive pay. On that chart over the right, you see the third one down kind of in that tan color is payee positive pay. Basically the same thing. Payee positive pay just takes the payee line into account as well. Positive pay simply is a check fraud prevention system that you have with your bank that checks all the information on the check with what's presented. Potentially the payee's name, the dollar amount, the check number, the date of the check as well, potentially as well. Other things that help stop check fraud: segregations of accounts, having the accounts payables account, having an accounts receivables account, having a separate payroll account, for example, are all smart things and ways to segregate out and stop potential fraud on some of those accounts that no checks are written off of, such as your accounts receivables accounts, having a post no checks notice on there, so no checks can actually go out of that account. The checks themselves obviously can have tamper-resistant features on them, which highly helps the check washing process, the duplication process, the photocopying, the electronic deposit sources as well. So all very important things. Next slide, please. In the survey, obviously the second most popular thing was wire transfer fraud. 39% of financials reported being or trying to have attacks via wire transfer. Most of these are done via business email compromise, which we'll go through here in a little bit. So ways to stop that is ways to stop check fraud. Next slide.
Matt, I got a quick question that's just come in. Joe's asking if there is an actual monetary loss due to fraud, who bears that responsibility? And doesn't the bank usually cover that loss?
Yeah, so we'll go into that in a little bit more detail coming up, but basically it's dependent upon the type of fraud that occurred. So check fraud loss versus ACH versus wire all have different regulations set by the government around who bears that responsibility. For example, a check, you have up to 30 days in most cases to challenge that payment and to receive funds back. A wire, especially an international wire, is basically instantaneous. The second you hit send and those funds leave your bank, it becomes almost impossible to get those funds back. So it's a little bit dependent on those things, but we'll get back to that in a little bit more detail coming up here.
Thanks, Matt.
Yeah, of course. And again, if you've got questions, feel free to continue to chat them in. So just sticking with the losses theme, cybercrime losses are topped $1 trillion in 2020. Those losses do, of course, include the physical monetary loss of funds going out there, but it also includes things that you don't necessarily think about: business continuity, remediation, the legal costs of getting all this stuff done and handling it. You being sued by your employees for information loss, your vendors from information loss, loss of customers because you now have a bad reputation, and of course that brand new reputation. Next slide. So now let's go into a deeper dive into business email compromise, which is a large part of it. So simply put, business email compromise is a sophisticated scam targeting businesses, suppliers, and vendors that exchange financial payments. How is business email compromise done? It's done a myriad of different ways, but basically, obviously, as it's stating, business email compromise traditionally starts with an email, which we'll talk about. On the graph on the right, you can see that the prevalence of business email compromise has almost doubled in the last 2 years, and the trends continue to go up because it is such a highly successful form and it's so easy to commit. Next slide, please. So simply put, how business email compromise works, or BEC, is an email is sent to someone. That email typically has an attachment or a link embedded within the email. When the recipient of that email then clicks on the attachment or the link, malware is installed on that device. From there, the scheme kind of can go a lot of different ways, but typically the fraudster will sit within that system for a period of time to continue to monitor what's going on, what payments are coming in and out, what vendors are being used, are certain invoices being used. All of that information is extremely valuable to these fraudsters, as of course is your potential business and account information that they're able to visit and see. Next slide, please. So basically on the side, on the left-hand side, you can see the business email compromise organization exposure year over year. So the third-party emails coming in, and you can see that it's staying pretty steady with the attempts. However, you saw from that last slide, the actual amount of financial loss continues to go up because these schemes continue to get more and more sophisticated as these fraudsters learn more and more about the process and ways that it actually works. Next slide, please. So these fraudsters, once they get into your system, the different forms of payments that they're targeting, you can see on here. So where actual exposure on that slide many slides ago was overwhelmingly skewed to the check side on actual losses, you can see on the business email compromise, it's very much more skewed to the electronic forms of payment. Obviously, business email compromise is electronic. What they're trying to do is to get you to make payments quickly. So as Joe's question alluded to on who bears the responsibility, these electronic forms of payments have much shorter timeframes for the fraudsters to get funds. The wire, typically same day, right? You go in there, you say, send this wire, it shows up the same day. An ACH credit, an ACH debit can be same day, at worst, typically are next day payments. So much quicker forms of payments versus a check, which they then have to fill out. They have to stick in the mail. That mail has to go somewhere. However, the fraudsters are obviously also going after checks at 14%, corporate credit cards to try to get those corporate credit card numbers, 9%. It gets you to mail gift cards at a measly 2%, but still out there. Next slide, please. So it's important to know who within your organization is being targeted by these business email compromise attacks. So obviously on the right here, you can see it's hard to read probably the graph at the bottom, but that 61% portion represents the accounts payables department. So overwhelmingly, they're being targeted. But that's not to say that these other areas within the organization are less important. The C-suite executives, the officers of the company, the HR department, the treasury department are all targeted as well. Oftentimes what happens, however, is when these other organizations or other departments within the organizations are targeted, if they fall victim to these business email compromise schemes, they're the ones relaying the information to the accounts payables department. The accounts payable department is taking their authority, their authorization to issue payment. So it is equally as important that all areas of the bank, anyone who potentially deals with funds, account numbers, submission of vendor payments, are all trained and educated on these processes, these schemes, so they know what to be looking out for. Next slide, please. So within business email compromise, you typically see it broken down into three kind of unique emerging threats, we call it. The first one, and by far the most common one, is vendor impersonation. This is the one where they pretend to be your vendors. They either send you fake invoices for payment. They send you emails that say, our information has changed at the bank. We're now banking with XYZ Bank. Please remediate your payments there. Those type of impersonations are by far the most common. After that, you get account compromise, That's where the malware, which is basically the virus by clicking on the attachment or the link, is installed on your computer system, and the myriad of things can happen. Your system's then hacked, all of your information that you have saved on there, all your vendor data, your accounting softwares, etc., are all compromised. So dependent upon what information is saved within your system, that information is all completely compromised. Payroll diversion has become really popular in the last couple of years here. That specifically targets your HR staff. They're trying to either, number one, steal payroll information, such as social security numbers in your employee list, or two, it's asking to change the payroll direct deposit information from employees. So if an employee's Gmail, for example, gets hacked, they can then send an email to their employer and says, hey, I now bank with this new bank. Please divert my payments to this new bank. So that's what the payroll diversion is. Next slide, please. So here's just kind of a charted out look at how these schemes typically work. I just wanted you guys to kind of have those in there. Again, this presentation is going to be provided to you guys. Next slide.
So Matt, I got a question coming in from Tom asking about these different schemes and if there's any software you can recommend to combat these different types of cyber attacks.
Yeah, that's a good question, and that's a tough question. So, yes, there is. There's a lot out there. Before I directly answer it, I'll always say the fraudsters are always typically one step ahead. So it's always trying to be ahead. And then there's always your employees, and that's really where the biggest vulnerability comes in, because as good as the software can be, there's always holes on what you allow your employees to do. So there are companies out there. The larger ones are your publicly traded companies, your CrowdStrikes of the world, your Palo Alto networks. The government, for example, uses these organizations to try to protect their data. But we do hear about the government falling victim to a lot of these scams, being hacked, having ransomware, which I'll go into in a second, download on their system. So you say, well, if the government's paying millions of dollars to these massive organizations, how can my organization that maybe more effectively employs a McAfee antivirus software or something of that nature, how are we safe? Well, it's a good question, and the answer is really just having those softwares, having them as much up to date, and having your staff trained as best you can. It's the combination of all of that, which is how you're going to protect your company. So obviously, it needs to play in tandem. Obviously, your company needs to have a antivirus software out there. You guys should hopefully all be having backup servers to back up all your corporate data out there. All vitally important things to have within your organization to protect yourselves and protect your data. But your employees, again, are the biggest vulnerability. So we talked about business email compromise. We talked about getting you to click on the attachment, the link. And as I alluded to, what that does is it installs malware, commonly known as a virus. Typically comes in three forms: Trojan horse, spyware, ransomware. For the sake of really time today, I'm just going to concentrate kind of on the ransomware. Ransomware is the one that we hear about all the time in the news, right? That's where your system gets that screen and that picture that pops up there that everything's been locked down. Typically, they then ask for you to remit payment in the form of Bitcoin almost always to them in order to get the key to then re-unlock your system. Major companies, Colonial Pipeline, for example, JP Foods, those are kind of the last two really big organizations that each spend millions of dollars paying for this ransomware to unlock their systems to get the funds back. When ransomware happens, there's not just the cost of your system being locked down. There's a massive amount of loss to your time that you also have to think about in your files. Just because you have a backup, like I alluded to probably having, doesn't mean you're safe from ransomware attacks. Yes, you can revert back to older data and your losses, whatever wasn't saved from last point of backup. But you have to remember, as I mentioned, this malware is typically embedded within the software a long time before it's actually executed. So typically, these fraudsters are in your system weeks, if not months, prior to them deploying the ransomware attack. So when you go to revert to those backups, it typically takes your IT department an extremely lengthy amount of time to actually go through those backups and make sure it is fully safe, figure out where the malware was installed, uninstall it successfully, and then redeploy that backup. If you simply revert to a backup, you're simply going to redeploy the malware and give the fraudster a chance to lock your system down as well. The other thing is the loss of data. You have to remember, like I said, these fraudsters were in your systems for months. They then encrypted all your files in your entire system with this ransomware attack. They have copies of all of that. So all of that information is potentially exposed, and you're then in need of going out to all of your vendors, all of your customers, telling them that you have faced this type of an attack, and their sensitive information is potentially exposed with it. So there's a huge cost involved with that, potentially legally, potentially regulatory, that all goes into it as well. Next slide, please.
So Matt, I've got a question coming in from Kim here. How do I get my data back if I'm the victim of ransomware and don't pay the ransom? How long does it take to recover?
Yeah, so it's a great question, Kim, and there's different answers to that. I would obviously defer you to your IT department, and we talked about backup, which potentially takes time. Down here in San Diego, I know most of us are in Southern California. one of our large hospital providers, Scripps, for example, was an attack of ransomware. Scripps chose not to pay the ransomware attack, which I'll touch on more here in a second. It took Scripps over a year to unlock their systems again, and they're still to this day, I think it's been over 2 years, still not fully able to receive all of that information. It cost Scripps having to cancel surgeries, doctor's appointments. It caused a huge wave of problems down here in San Diego. So it took them over a year, if not ongoing, to get their information back, period. A lot of people actually go out there. I mentioned Colonial Pipeline, I mentioned JB Foods paying millions of dollars. Those companies actually paid these fraudsters the millions of dollars in Bitcoin to get the key to unlock their system. Why did they do that? They needed access to their systems faster than their backups were able to provide, faster than their IT could get them going. So they chose to make those payments. It's bad to say, but these fraudsters have a reputation of actually coming through. So when you pay them, they will give you the coin and unlock your data. They need to continue to have that reputation. Otherwise, no one obviously would pay these ransoms and have their data unlocked. So they're kind of honest, truthful fraudsters, to be honest with you. And so that's the quickest way to get your information back. However, that obviously comes with a cost, the financial of paying them, but also the cost of you get your data back, you know it's now been compromised, and your IT still needs to go in there and scrub everything because that malware, those viruses are there. So it's kind of a vague answer I gave, and it sort of depends on how you decide to get your information back. But it's going to be a lengthy and painful process no matter how you choose to go forward. So some additional fraud risks, which is a lot of what Rick kind of touched on, we can kind of go into next. So corporate credit cards. Corporate credit cards are obviously still a very vulnerable point. However, they've gone down statistically over the last few years. And why is that? Kind of on that picture on the right-hand side, hard to see. It's that chip that you have in the card. When you now have that chip in your credit cards, your debit cards, and you're emitting payment at the location, so you're tap to pay, you're inserting the credit card into the slot on the credit card reader, that information is now encrypted when it goes to the credit card companies. So it's much more secure. So what's the vulnerabilities with corporate cards now? It's the card not present. It's your employees going online, ordering supplies, ordering things from websites, and just typing in the credit card number. There's ways to combat that. There's things called ghost cards, where there's not actually physical cards. There's one-time use cards, where your system will give you a random credit card number that's only valid for the very specific payment that you say. You tell it a date, you tell it a dollar amount. That is all that payment is good for. So there's a lot of ways to combat this fraud. I've talked about some of the regulation around getting money back when it comes to check payments, ACH payments, wire payments. Credit cards are regulated differently. They're typically regulated right by larger corporations, your Amex, your Visas, your MasterCards, your Discovers of the world. Their regulations are a lot looser. Your chances of getting funds back are a lot greater with credit card, which is one of the nice positives to using corporate cards, but they are a massive vulnerability spot with the company still, especially that card not present. Next slide, please.
I guess it just pays to know your employees.
It very much knows to know your employees, but also the websites that they're visiting, the websites where they're entering these card informations. Are they buying their supplies from a trusted vendor, a Costco, for example, of the world, or are they looking and going out to these random websites on Amazon and entering card payments there? All those things are much more risky than your kind of larger vendors. So internal fraud, Rick obviously touched on a lot. We unfortunately see it at the bank quite frequently. And here are some of the signs to look for. Rick touched on a lot of them, so I don't want to spend a lot of time here on them. But the big ones are just noticing your employee behavior, and they are the most difficult forms of fraud to stop. Next slide, please. But what should you actually do when fraud happens? So the first thing you should do if fraud actually does happen or attempted to happen is notify your bank. The quicker you notify your bank, the more likely it is that we can recover the funds for you. I mentioned some timelines, checks up to 30 days, wires pretty much instantaneously, ACH anywhere from 1 day to a week or so. So the faster you notify the bank, the faster we can lock down your accounts, the faster we can try to get these payments back. Typically as well on the bank side, once you see one attempt at fraud, you typically have a lot more to follow. So the faster you can lock down your account, the less likely that repeat fraud will occur. Reporting the fraud to law enforcement. So that's your local law enforcement. That's typically going to be necessary should you want to actually get any funds back, whether that be from the bank or your insurance company, which we haven't talked about yet, but either of those type of organizations are going to require a police report in order to get you funds back. You should report any of the fraud, especially business email compromise, to the FBI's IC3 division. That's their Internet Crimes Division. Will they be able to get your funds back? Will they take action specifically to your case? Honestly, most of the time, no, they would tell you the same thing. However, with business email compromise in particular, it's typically foreign actors who are committing these crimes. It's organizations out of Russia, right? That's what we keep hearing about in the news since Russia attacked Ukraine is be prepared for hacks from Russia. So when it's larger organizations like that, we see a lot of Iran, North Korea, China, India, for example, don't want to just pick on Russia. When it's larger organizations like that, the FBI is compiling data to go against these organizations to shut them down as bigger schemes. So that's why it's vitally important to submit the information to the FBI's IC3. And honestly, they do recover funds back. So the JB Foods, the Colonial Pipeline ransomware attacks I touched on, they actually contacted the FBI before making those Bitcoin payments. The FBI, using their software, was able to track those Bitcoin payments and actually was able to lock down those accounts with Bitcoin, so the fraudsters never actually got payment. Payment was remitted, but it was never actually received by the fraudsters, and they got the coins to, or the keys to unlock their information. So things like that can happen and do happen. And then Rick really touched on it, but he called it document. I'll say record. Having a written record of what you're doing, what's going on, what fraud actually occurred, what links did you click on, what process did you take. That will help IT, a forensic expert, if you have to bring one in, to go back and trace the steps to kind of unravel what's going on and see what's happening. Next slide, please. So what are some of the preventative measures to keeping your funds safe? We've touched on a lot of them, but let's kind of go through them quickly here. So the first thing I can tell you is to do what all of you guys have taken the steps here today, which is get educated. So you're today taking a step to get educated, but what about the rest of your staff? Rick sort of alluded to that as well. Are they trained? Are they up to date? They are vulnerable points within your organization to commit fraud themselves or be a point of exposure for your company being exposed to fraud. Reconciling your accounts daily is a huge one. It'll catch the fraud quicker to stop future incidents of fraud, but it also gives you the chance to alert the bank quicker so that we can take action. Using positive pay to stop check fraud, like I mentioned, is great. Using payee positive pay, even better. Activating alerts on bank accounts is things that most organizations don't do. All banks have alerts. Send me an email anytime a wire goes out. Something as simple as that lets you know when wires go out. They're probably so few and infrequent that when something is amiss, you'll quickly know. Never trust anything sent to you via email, period. So whether it be an attachment from a known vendor, whether it be an internal employee, etc., if they're asking you to change payment information, if they're asking you to remit payment, if they're asking you for detailed information so they can send you a wire, all of that are red flags. You should phone verify any of those requests. Just picking up the phone, calling that employee, calling that vendor, and saying, Did you want to change this account information? Do we need to remit this payment? Whatever the case may be, picking up the phone and verifying it is your best source of stopping those types of fraud. I'll also caution you, never call the phone number on the emails that are sent to you. The fraudsters are obviously smart enough to put a phone number on there that's going to route to them. So then if you call that number, you're just calling the fraudster. Call the numbers you know, call the individuals that you know within the organization. Next slide, please. So be wary of any internal emails. You know, we've all gotten those emails that perpetrate to be the CEO of a company, a board member, whomever it may be, that's saying, hey, we're buying this new company. Hey, we're buying this new building, this piece of equipment. We need to send this large wire out ASAP. Typically, those emails come from what C-level executives, trusted sources. They typically within them have a sense of urgency. We've got to send it today, otherwise we're going to miss out on this deal. We're going to miss out on this opportunity. Oh, and by the way, they want you to keep it a secret. Don't tell anyone about it. This is for your eyes and my eyes only type of a thing. All of those emails should be scrutinized and be phone verified back. One of the things that we haven't really talked about, but everyone should be aware of as a point of vulnerability, is social media, including LinkedIn. What you place out in social media can be used against you and the companies that you work for. You, Mr. Controller of the company, CFO of company, post, hey, I'm on the beach in Hawaii, for example, on vacation, to Facebook or Instagram. You know, then the fraudster who's monitoring that company and monitoring your account knows, oh, the person who typically does these tasks is no longer in the company, meaning a backup is there performing those duties and responsibilities and probably isn't as aware and as knowledgeable, to what we're doing and how we do it within our company. That person is probably more vulnerable to the trusted sources attack, the C-level suite attack, because they want to make Mr. President, Mr. CEO happy by doing those things. So be careful what you do. Last week, the FBI just released a giant report on LinkedIn specifically, saying it has now become a massive source of fraud and fraud schemes within LinkedIn. So I just caution you, especially since we're in a business setting here, be careful who you accept as connections within LinkedIn. You really shouldn't be accepting anyone who doesn't have a business with you, whether they're a coworker of yours, whether they're a vendor of yours, whether they're friends with you from other organizations. You should very much be cautious of who you accept. We talked about the FBI's IC3. And lastly, you know, I know we're running out of time here. Consider cyber insurance. I kind of briefly talked about it. Talk to your insurance agent on it. Cyber insurance to cover things like business email compromise are typically a separate rider than your general policy. So talking to them and making sure that you have something within your policy that would cover you against those types of losses, even up into including ransomware attacks and paying those requests for fines for the keys to unlock the accounts, are all things that can be covered. Talk to your insurance agent about it. Next slide.
Yeah, let me just add on to what you're talking about there with the cyber insurance, Matt, is you will be, by most reputable insurance agencies, you will be needing to fill out a fairly comprehensive application and prove that you're worthy of cyber insurance. Prove that you have systems and processes in place that you are following, that you have frequent backups, whatever the minimum standard requirements are, you need to actually prove that you're doing that. And what we've seen happen many times is when there is a claim, and the insurance company comes in and says, well, you said this on your application, you didn't actually do that, therefore there's no insurance. And so you get the privilege of paying for, you know, many months of cyber insurance without any actual coverage. I'm not saying that all of them do that. It's something to be very careful about. You have to take it seriously. And it gets back to our discussion about the internal controls of your organization and as it relates to also the cyber area.
Yeah, no, absolutely. You hit the nail on the head. Pretty much every instance I'm aware of where insurance got involved. They sent a cyber accountant to the company to unravel exactly what happened, a cyber forensic accountant, and they will look at things like, when did you last update your antivirus software? Things as simple as that. And if you didn't update it properly and on time and have the most up-to-date antivirus software on your computer, your claim will most likely be declined and denied.
Yeah.
So very, very important to do those things. And that kind of touches, like you alluded to, Rick, on those internal controls, is having those internal controls, have them documented, and actually follow through with them and execute them. Next slide.
Thanks for.
Yeah.
Next slide. All right. So thank you very much, Matt, for your informative presentation. You see, folks, our contact information there. We're happy to follow up with you. I've got a few questions that have come in the remaining minutes. One question is, are there any industries or sizes of companies that needn't really worry about fraud? Aren't the fraudsters looking for the big hit? What's your thought on that, Matt?
Yeah, no, that's a great question. So it used to be the day, right, where they would target large corporations because there was more money sitting there. But those days are absolutely long gone. Every single organization, whether it be a little mom and pop business to a massive corporation, are all experiencing actual and threats of fraud occurring through every single channel that we discuss, whether it be check fraud, whether it be internal fraud, whether it be business email compromise. So no matter the size of the company, everyone should be vigilant in taking a lot of these steps that we've talked about today in place.
Well, basically, it gets down to, do you lock your doors at night when you go to sleep? I mean, that's internal control. You're protecting your family and your valuables. So yeah, I think, from smallest to biggest, it needs to be something we're concerned with. And then another question that came in, companies that obviously need to get started on some kind of fraud prevention policy, given everything that we've learned today. The question is, should we start with audit controls or bank controls or both simultaneously? And I'm just gonna say, start with the bank controls first, because that's gonna protect your cash. That's your most liquid and important asset, likely. And so as it relates to internal controls for an audit, yes, you wanna be concerned with that. But first and foremost, I would say, make sure you're taking advantage of all the different opportunities to protect your finances. So like Matt was saying with the positive pay, which is an excellent product to make sure that the checks that go out aren't, intercepted by some fraudster and cashed at the bank. So there's lots of good things like that to take advantage of. So first and foremost, deal with the bank. Second, if you've got financial statements in your business, yes, you want to have an internal control review. And then I've got time for one more question. And this gets back to what we were talking about earlier with knowing your employees. And one of our attendees asks, I've heard it said that some organizations do credit checks on their employees, before they hire them. And the one caution I would have here is, I know we might have listeners from other states listening outside of California. In California, you have to be very careful about how you do that. You have to get permission from the individual, and typically it's done after they've been hired, and is a condition of continued employment as opposed to before they're hired. But I think it's worth taking a look at, doing a credit check on your employees, making sure especially if they're going to be handling money or other assets, that there's nothing that is a red flag. So with that, I'm going to say thank you very much to everybody for joining us today. Again, there's the contact information. Please contact us if we can provide more information or answer any questions for you. And have a great rest of your day. Thanks so much. Take care now. Bye-bye.
Thanks, everyone.